We're all worried about the wrong thing, apparently. Well, everyone's stressing over the interest rates, the inflation data, and whether Jerome Powell will finally actually cut the damn rates. Guess what BlackRock is focused on? Well, it's something entirely different, and it's not missing out on Bitcoin. These guys have been pushing it like no other. The Fed is dragging its feet on rate cuts, partly thanks to Trump's looming tariff war and Trump kind of bashing Jerome Powell all the time, trying to helping. But BlackRock, they're not in the mood to wait. They don't care, man. Their customers via the IBIT BlackRock ETF are stacking Bitcoin like it's a Black Friday fire sale, quietly, relentlessly, and at massive scale. Stick around because in this video we're going to be breaking down how the smart money is actually playing the game and what it means for the rest of us. So what's going on at the macro level? Well, Fed Chair Papa Jerome Powell said the Fed will continue to wait and see how the economy evolves before deciding to reduce key interest rates. But pressure is building for a July rate cut, with dissenting voices within the Fed itself saying it's time to cut the rates, Jerome. But Papa Powell, he doesn't care if Trump's asking him to cut the rates. Trump gave him the job, man. But Papa Powell's main explanation is that the economists within and outside the Fed generally agree that tariffs will push inflation higher. Thus, it's the wrong time to cut rates. Powell also said he expected to see the tariffs' impact on prices emerge in the next few months, starting in June. So we need to wait until maybe mid-July to check out the June inflation report, see if it's starting to show up yet. But here's why all this matters. High rates equal expensive money. When borrowing is pricey, businesses slow down, risk appetite drops, and speculative assets like crypto and stocks tend to suffer. At least that's generally the idea. Not always. Obviously, we can see a dot-com-like era bubble form and everyone make truckloads of money because we had high interest rates in the late 90s, by the way, but we'll get to that later. Anyway, add in global instability, Russia, Ukraine, Israel, Iran, man, China, whatever, bullshit stuff. People are nervous, okay? But of course, the $11 trillion Titan BlackRock doesn't give a crap about any of that stuff. Their customers have been stacking Bitcoin like mad. The BlackRock sales team is undefeated. They are pushing the BlackRock IBIT ETF like mad. Since the January 2024 launch of IBIT, their Bitcoin spot ETF, they've amassed almost 700,000 BTC, accounting for 3.3% of the total supply. Just BlackRock. And they're not alone. Fidelity, ARK, VanEck, the biggest whales of Wall Street are not slowing down either. The Bitcoin ETF saw a $2 billion inflow last week. That's crazy, man. $4.6 billion in total for the last 2 weeks of June. That is some serious money, despite the headwinds that have been brought on by wars and high interest rates. And this strategy is really not a bad one, since high rates do not necessarily kill risk assets. Remember, between 2004 and 2006, the Federal Reserve raised interest rates from 1 to 5.25%. By June 2006 due to inflation. Despite these hikes, the S&P 500 had a 13.6% return in 2006. The dot-com era bubble from 94 to 2000, we had rates over 4% the entire time, as high as 6.5%, and stocks went absolutely bonkers. Bitcoin and the S&P 500 have stubbornly rallied. Stocks made new highs, despite the Fed's insistence to keep the rates higher for longer. Bitcoin went up to $112K a few weeks ago. The traditional market is buoyed by the AI boom right now, and Bitcoin finally be recognized as some kind of digital store of value amongst corporations and TradFi whales. Now, before we dive into the rest of this, I want to tell you how you can save big while trading over on Femex. Femex is the OG cryptocurrency exchange built everybody everywhere, and they're giving you VIP level 2 access exclusively when you use my link. So that's 50% off your spot maker fees, 40% off your futures maker fees. Combine that with the $30,000 in bonuses for trading and deposits, and you're going to be stacking some serious value. Look, Femex is built for pro traders. It's available everywhere and is trusted by millions. I've literally been using them for years, so don't miss the chance to trade smarter and save big time on your fees. Check it out, link right down below here, okay? Now look, in the Bitcoin ETF scenario, if you're not bullish enough, then think about this. The Bitcoin halving is not just a random name. It literally halves the number of Bitcoins awarded to miners. After the April 2024 halving, the daily Bitcoin issuance dropped to 3.125 BTC per block, with a new block being produced roughly every 10 minutes or so. So what that works out to is about 450 BTC per day, or roughly 13,500 BTC per month. Multiply that out for the entire year. Miners are generally expected to produce around 164,250 BTC, maybe a few more or a few less, depending on if blocks get mined quicker or longer or whatever it might be. It's approximate, right? Over 95% of all Bitcoin have already been mined. there's less than 1.1 million BTC remaining to be mined, making new supply increasingly scarce. Now, a May 2025 report says that public listed companies have also bought roughly 157,957. It's pretty exactly accurate. Let's say about 158,000 Bitcoin as of May 1st, accounting for 96% of the 164,250 BTC projected to be mined throughout the year. Think about that. Public companies have bought basically the entire supply that miners could produce this entire year, combined with 16,799 BTC acquired by private companies, plus another 34,968 by ETFs. And you have these three groups acquiring more than 209,000 Bitcoin just in the first few months of the year, because that data is back to May 1st, right? We're already in July. That's more than all the Bitcoin that'll be mined this year. And let's assume that the last 2 months without the data have been insane as well. We know that Bitcoin ETFs have seen huge inflows, so we are looking at an absolute supply shock waiting to explode. I'll give you a few seconds to let that sink in. And look, I know there's sellers out here. Tom Lee's out here saying that, look, there's been a lot of people who have been holding Bitcoins at $100. They're taking 100K. They're taking the profits. But most people look at Bitcoin's price and assume that nothing's really happening. I don't blame them. It seems to be moving sideways. The consolidation periods for the last couple of years have been absolutely brutal beyond belief. But that's because people are watching the wrong metrics. The real action isn't visible necessarily on the price charts when you look at them. It's happening quietly behind the scenes. First, most of this Bitcoin demand, especially from the ETFs and the large institutions, it's happening off the exchanges, so it's not mega pumping the price. If only Michael Saylor would do market buys on Coinbase for $1 billion at a time, the price would pump like crazy. But instead, it's all going through OTC desks and different custodians. That means the orders are not hitting the orders book, so it doesn't immediately move the market. But make no mistake, it is draining supply, and it's creating a new floor for the price of Bitcoin. Meanwhile, the Bitcoin balance on exchanges has indeed kept dropping. People are indeed buying Bitcoin. As of mid-2025, exchange balances are sitting near 7-year lows, with less than 2.1 million BTC held on centralized exchanges combined. And you have to keep in mind that 2.1 million BTC is not all up for sale. People are just lazy and store it there too. But that's barely 10% of the total supply, and it's still trending down as people do take Bitcoin off exchanges and dump it into their cold wallets. Let's not forget too, ETF issuers aren't the only whales in town. We've got Bitcoin treasury companies, we have private firms, we even have countries now competing for limited supply, whether that be Bhutan or El Salvador or Pakistan or even the old US of A, okay? All have strategic reserves of Bitcoin. So what happens when miners can't meet the demand and exchanges start running dry? Miners cannot meet the demand. We've already very well clearly proven that. Exchanges are running low on coins. You guessed it, we enter into price discovery, and that's why smart money isn't sitting around waiting for rate cuts or CPI prints or the next Fed meeting. They know there's only 21 million coins. They see the data in front of them. They know demand's continually rising. They're front running the supply crunch. Bitcoin ETF buyers over at BlackRock are smart, because once the price reflects this imbalance, it's game over for latecomers. Gone are the days when Bitcoin is just some speculative asset for nerds or dismissed as magic internet money. You now have BlackRock, the most powerful financial institution in the world, pushing it to their clients, and their clients are buying like mad. Now, I'm not here to tell you what to do with your money. That's up to you. I do what I do with my money, and we talk about things that are going on in the market on this channel. But the world's most powerful players are making their move. Don't ask Lark, ask Larry Fink, BlackRock's CEO. He's publicly said Bitcoin could become the world's next reserve currency. Probably nothing, right? Trump's in, okay? A lot of other big players are in too. Some of the most famous investors in the world, people like Paul Tudor Jones, are big Bitcoin bulls. Bhutan's in. Bhutan's in. I know you don't even know where Bhutan is. They got yaks, man. They got red pandas, and they're in. They're mining Bitcoin. In fact, Bitcoin accounts for 40% of the GDP right now. That's crazy. Look, if you're still not convinced, I don't know what to tell you. But odds are you're sleeping through the greatest wealth transfer of our lifetime. And people who thought that Bitcoin's too expensive at 10K are probably still sitting here at 100K going, nah, it's too expensive. It's too late. Train's already left the station. Train's not left the station. It's a long train. You still have time to jump on it, but it won't be at the station forever. Okay? Okay. Thanks for watching.